In this case study, we're going to go through how I purchased a property for free using other people's money, and it became one of my best performers ever. So I purchased this property in Adelaide's northern suburbs. It's a 2-bedroom villa. I purchased it for $171,000 in 2021. So not too long ago. It's just under 5 years ago, and it actually became one of my best performers. I tell people that this one has infinite return on investment, and it was a free property. Now, the way that I did that is I used equity from another property, $200,000 to cover the purchase price, as well as upfront costs, including stamp duty, legal fees, building pest inspection, all that sort of stuff. At the time, the property had a rental value of $240 per week. So look, it wasn't taking care of itself, but it was relatively close. Like it's not a big bill, as you can imagine, at $171,000. This one was a relatively easy buy. So when we looked at this property, we saw that the vacancy rate in the area was declining. They had a vacancy rate back in 2017 of just under 2%. Now, we used to use 2% as the benchmark for if an area was undersupplied in terms of rental property. And you can see here that over the last few years leading up to the property, when we purchased it in the beginning of 2021, we had ultra low vacancy rates at the time of 0.2 or 0.3%, that is, which is relative dire straits in terms of tenants looking for a rental property there. In addition, this property had a really good rental value. It was around about 7 or 8%. From memory, it was around about $240 or $250 per week. So based on a $171,000 purchase price, it had a mad rental yield. Strata wasn't that expensive either. So strata was relatively low. It had great cash flow. And so that being said, it was a relatively easy purchase in terms of cash flow and statistics. In terms of the asking price, again, $171,000, the average 2-bedder was going for around about that, $170,000, $175,000. So it was a relative no-brainer there. And you can see that property prices had started to rise in the area at the time. So we had about a year's worth of data indicating that there was a bit of a trend there as well. And then you can see here that the rough rental price for a 2-bedder in the area was around about that $240, $250 mark. Now you can see here that the overall availability of properties started really declining from around about end of 2016, beginning of 2017, where you had roughly 500 properties available on the market. That's probably a peak in terms of recent history. And then you can see this massive decline, especially in 2019 to 2020. Not even after COVID hitting. So COVID probably hit towards the end of 2019 here. You can see even before COVID hit that they had a massive drop in the overall availability of property listings there. So you can see here, we went from around about 400 properties listed at the end of 2019 to less than 300 property listings by the end of 2019. So a 25% drop in the overall supply of properties. And then even then, when we look at when I purchased it roughly February 2021, you can see there's another drop in property prices falling below 200 properties at the time. If we look at the split between houses and units, here, you can see that the number of units did drop from around about 80 property listings on the market towards the end of 2018, start of 2019. And then we had around about 50, eventually falling to just over 40 property listings on the market. In terms of overall rental listings, again, it's a very similar story. 2017, about 125 rental listings available on the market. And then you can see the drastic reduction in rental properties being made available to just over 25 to 30 rental properties being made available in this area. In terms of the difference between houses and units, you can see here that even though there's only a meager amount of units in the area at 40 property listings, that fell drastically to just over a dozen properties in the area towards the end of 2020, start of 2021. Now, this graph shows you how population had increased at a rate that was greater than the South Australian average. So even here at 2021, you can see there that it had a population growth of 1.3% when the average South Australian growth was only 1.25. Albeit meager, it was consistent with the year before at 1.36 compared to 1%. And even now in 2026, it looks to be on parity with the South Australian average. So if we reset the zoom, you can see that the vacancy rate has come up over the last few years. However, it's still at 0.6%. So still relative dire straits from back in 2021, we were in 0.1 or 0.2%. Even now, we're still well below the national average at 0.6%. Even with an average of 1.3, 1.4% across Australia, you can see there that this area still has a vacancy rate of 0.6%, which is still really low. Rental growth has declined. Rental yield growth, rather, has declined. You can see here that in 2021, we were averaging around about 7.5 to 8%. It's really dropped now to around about 5%. And that is because, number one, capital growth is exceeding rental growth, and there's a limit on the number of rental increases that you can have on property in the area. If we look at property prices have really come up from around 171,000 from our purchase here in 2021, all the way up to around about 4 to 450,000 for a 2-bedroom unit in the area. Rental growth, we're looking at starting off at 250 per week in 2021. We're now looking at around about 4 to 430 per week for a 2-bedroom unit. And there are a fair few properties still being made available. However, we're still well below long-term averages here. And even then, the number of days on the market that property is spending is still relatively low. Rental listings are still relatively low in comparison to long-term averages, and days on market have come up slightly. However, the vast majority of properties are still going in under 30 days. So that's the case study of how I purchased a property for $171,000 and turned it into a desktop valuation of about $450,000. Overall, it is a capital growth of 160%. However, because I used the equity on another property, I didn't use any of my own money. I used other people's money. And then essentially what happened is I just transferred the security from one property to another, and I retained my ownership of my existing property, my equity, and I just transferred that debt over onto this property, and that's how I scored a free property. Thank you everybody for watching. If you do have any questions, please don't hesitate to reach out. I look forward to speaking to you. Otherwise, have a great day.